Good morning and welcome to today's edition of the London Session Open. Today is November 12th, 2019, and my name is Alejandro Zambrano, Global Chief Market Strategist with ATFX and also the editor of InvestingCube.com. We're going to take a look at the market as we should do at this time of the day. We just had some UK data out. We're going to talk a bit about that. We're also, of course, going to talk about everything else moving in the markets. Now, if you are first time you're watching this, it's a daily webinar we do here on investingq.com. And if you're watching this live, you're most welcome to say good morning or hello. As well, if you have any questions, you can just pop them there in the chat box. Okay, let's begin. Okay, so we got some UK data out. So the unemployment rate declined slightly more than anticipated. So the unemployment rate declined to 3.8% from 3.9. That's a sign of strength. And jobless claims change increased. The actual outcome was 33 versus the forecast of 21.3. Now, the jobless claims change, it's not like the NFP that really matters too much. It's more about the unemployment rate. And what is interesting here, I think what sticks out is how wage growth has moderated a little bit. So wage growth was 3.6% versus 3.8 anticipated. So slightly lower than expected. However, I guess that headline number or the unemployment rate declining is giving the pound a bit of a boost. Now, technically, yesterday what happened is that the market moved to the upside. You see that move here? It's on the back of the Brexit party saying they're gonna let the Tories alone, and the seats that they won last year, and try to focus on the other seats where Labour and Lib Dem could potentially win. The challenge there, though, what could happen actually is that you might actually have, because Brexit party would be there, so people in that constitution would say, well, you know what, I want to vote on Brexit party, and instead of maybe voting on Tories, so that it could technically further dilute the votes of the Tory, because they're still gonna be obviously having a contestant even in these Labour and Lib Dem strongholds. So it's not really sure if it's gonna help. And on Twitter yesterday, I put a message about that. Let's see if I can get this to work now. There's a guy called Chris Tucker. No, not Chris Tucker, but Chris. Chris Tucker is the guy from Family Guy. Chris Curtis, that was his name. So this guy, he works for YouGov, which is the company that does the polls. And he says, I hate to burst everyone's bubble, but I'm not sure this makes much difference at all. On current polling, the most important seats are the Labour-held margins, which aren't affected by this announcement. And this was, you mentioned that, it was also picked up by the Financial Times. And I guess that can explain a little bit why the market has gone all the way back down to the lows again. We also know the following, and that is that the Euro USD is bearish. We know gold is bearish, and also the dollar yen is bullish, and this could potentially again trade slightly lower. Of course, it's getting a bit of a boost now by the numbers out of the UK. And technically going forward, I mean, it's decent encouraging candle here, but again, it needs to go up again. And I think for the trend to change, as a minimum, we need to get out of or take out 129.33. But eventually, I think for this market to really turn bullish, you probably need to take out 130.17, which is this high here. So there's no real change to the outlook for the pound. This is the euro versus the USD. And last week I said it breaks to the downside, I could probably take price lower. As you can see here, the market is struggling a bit to trade much lower, and but there's no real reason to make any changes here in the outlook. I think if we do go up to 110.78, then people are gonna sell. As for the dollar yen, we talked about buying the breakout if you wanted to, or buying the dip. The dip is holding up, or was that good? So it moved up a bit. So since we talked yesterday, the market's up with, what's up at one point with 34 pip, and I think the market can continue to go upwards. We're still trying to break out, hasn't really succeeded yet. You have this little section here, but you still have on the big picture that inverse head and shoulders. So we just need to leave this area behind, which it could do because of stock markets. And then we could probably be on our way much higher. The target for this inverse head and shoulders is 420 point rally from the breakup point, which would be here. So leave you up here. Gold. So gold was in this ascending triangle, broke to the downside. It has a target of 1436. The market declined, retested the breakout, so far remains bearish. And I think if the market would swing all the way back up, I think people will sell. The only thing I changed here from yesterday is that we could lower the trend of funding a little bit to this level here. It's not the November 7th high, but it's the high of this candle here, the actual breakout candle. Crude oil markets, you know, they're trading sideways between 55.80 and 57.76. It's quite straightforward. I think now it's spent so much time here. So if we take out this high, you could get that little push like that. So you're looking at this little section up here, or that level here, which is 59.87. The alternative, which is what I would prefer, is actually goes down. Now there's a bit of a challenge here. I don't know if you can see the difference here compared with yesterday, but yesterday I said we can probably buy here somewhere. I push that back down now because you have people that have been buying here since Monday last week. So they accumulated and accumulated and accumulated. And then if this does not go up, as you can guess, when we start to go lower here, those people are gonna get stressed. So they probably, if we take out the low, we can have a bit of a bearish reaction and we can slide all the way down. But keep an eye on this upward sloping trend line. Maybe RSI hitting bottom somewhere here. And really, as long as you're above last week's low, I think we can still head higher. So if it goes down, it can plummet. But I will look for some sort of reversal, a little bounce in this little spot here. Stock markets, this is the German DAX. So it's going up and then down and then up, and it's spending a lot of time here. And we reached these levels as well on Monday last week. So as you can probably guess, if this doesn't trade much higher soon, all these people that bought here very late in the game, they're gonna get stressed. In fact, I think if I switch to a 1 hour, you wouldn't necessarily call this a head and shoulders, but you can call this some sort of a mini triangle. And realistically, this should, or not realistically, but normally this would actually break to the upside. But it could also turn into a reversal pattern as we start to trade below these levels. What do I prefer? I prefer just waiting for that pullback. As you might remember, I said you can probably buy down here. And that's what I'm looking for. I'm looking for that little pullback, and then maybe from here looking to get involved. As for the S&P 500 as well, you know, it's a bit bullish. And if you want to do scalping and that, and you know what you're doing, as I said yesterday, you can probably work with this as low and maybe buy on dips. You know, we've gone up a little bit, but it's barely moving. So when things don't really move too much, I don't really like to get involved. And I don't like to get involved in these short-term levels. But they're there if you want to work with them, retest, maybe working with this low, which is November 6th low. Whereas my preference is to see a stronger correction, maybe down to 3,047.5, and then from these levels try to do something like that. Okay, let's see if you guys have any questions. If not, I think we're going to wrap things up. So we have True Invention here. Good morning to you. And we have Marvin. Good morning. And we have Mr. Khan saying good morning. And Antonio Jimenez. Good morning. I hope you're doing good, Antonio. Okay. So see if you guys have any questions. Otherwise, I think we're going to wrap things up. Don't forget to subscribe to our YouTube account. I don't know if you've seen that. It's investingcube.com. We started to create these videos. Let me know what you think. I'm gonna try to produce. We're gonna try to produce at least one of these per day, and let me know if you think it's worthwhile. Here's the link for that. So Shakil Khan is asking for the FTSE 100. Sure, let's take a look at the FTSE 100. I think last time I looked at it last week, it was trying to break. It's trying to break higher. just see. Just give me a second. I have analysis on it. I just don't remember which one it was. Okay, yeah. So what's going on here? So you got a nice little double top, and then you have a nice double bottom down here, more or less. You got actually triple bottom. You got 1, 2, 3 lows. So this is a nice big rectangle like pattern, and it's quite interesting because you break the upside, you get that sort of move. You break the downside, and things could go the other way around. But let's not worry about that because we need to go all the way down here. So what happened here is we're going up and up and up, and then here yesterday the market traded below support and then tried to go all the way back up again above this level, but didn't really manage. So the way this looks like, it looks like it's gonna trade sideways for longer. I would not do it, but I reckon some people will do something like this, and then some people are probably gonna try to buy around the lows and try to do something like this. My preference for these sort of markets is just to ignore them and wait for the break to the upside, especially this move here, like that. Hope that helps. So True Invention says the markets are very confusing these days. I agree, the markets in general, they're a bit, especially currency markets, are a bit confusing. Not confusing, I would call them, but you know, they go to a level, they break the level, and then it moves 10 pip, and then it goes above, and then it goes down. So it's a bit of a messy situation in currency markets. But if you look at something like the S&P 500, as I mentioned before, you have this big target here, that ascending triangle. Because when we cleared this high, which is 3019, which is also the high here from July 2019, and also the high from September, we triggered that massive ascending triangle target, which is up here at 3210. So obviously we moved quite a lot, and you could have an opportunity to sort of trade a short term per the analysis I shared with you guys, and that's maybe what you can focus on. Maybe let it go down and then go upwards, unless you want to get involved, because eventually this is trading sideways here. And if it doesn't want to trade down, it's probably going to trade upwards, and then try to go upwards. So you can focus here, I think. And then you have crude oil, which has this little channel, which is quite interesting. Currencies and stuff like that. I do think the Euro USD is going to go down. I think GBP USD is also going to go down, but it's a bit fussy. Like this thing here, you see it broke below support. It should have just gone down, but you know, it's not doing that. And it's like that. Like if you look at something like Euro Yen, it's sort of stuck in this range. Like Euro Yen, like these crosses, you know, will usually move quite nicely. And I think what has happened here as well is just that you have a little bit of a change in the theme, where a lot of people have been very worried about the world economy, and me included. And we're right about that to some extent. Like in the Aussie dollar, I've been bearish for most of the year because of trade wars, and as well as like GBP USD. You know, there was nothing wrong with being bearish here as well because of Brexit. But now that changed, and things are changing as well with stock markets breaking up higher. So I think currency is just trying to find their footing and try to figure out what's going to happen. My preference is this, or the way I look at it. I look at the old school model, which is that the country that cuts interest rates the most, or the most amount of QE, tends to suffer the most. And from that perspective, you know, interest rates are positive in the dollar, whereas they're negative in the eurozone. The eurozone is doing QE, so from that perspective, you know, I want to continue to be a dollar bull. And I think if things do normalize, I think the Federal Reserve is going to be the first one to increase interest rates. So I still think that can come back, and I still think the dollar can come back in fashion. If you look at the dollar index, this channel that I've been using here is still working. You know, the market in 2018, it was going upwards, and it didn't touch the low perfectly, or this low level here, but it went up quite nicely. It does look like a double bottom in the dollar index. The dollar index can easily go down a bit, but as long as it's above these highs, it looks like it's just going to do something like that again. That's what I would say. Okay, so we got a question about the dollar Swiss C. So let's take a look at that, and then we're gonna wrap things up. So this is the dollar Swiss C. So the dollar Swiss C, last week I was bullish from here back up here. That worked out fine. Now we're stuck in the middle. It's a ranging market, so it's not necessarily very interesting to trade. And I prefer the break here to this high, which is the 10022 level. Because if we take that out, take the level out, then we could potentially leave all this behind. This as well, I wouldn't call it a rectangle, but it's some sort of double, triple top thing. And it might be, if we take out this high, that we might actually go upwards. If not, I think what you can do, if you wanted to, is maybe do something like this. This is what I would prefer, like we did, well, like what I did last week. The only time I wouldn't be buying at that dip is if you see stock markets just coming down strongly. If that happens, you just want to step aside, because if it does happen and go probably lower, take out these lows, and then probably sink down much lower. Okay, we're gonna wrap things up, guys. Have a beautiful day. Don't forget to click on that link, and don't forget to like the video. That's really important. And as well, this page here, please share it. If you're on any forum, or if you're on Twitter, places like that, please don't forget to share this with people, so I can so we can have more people joining. I just noticed this as well. It's wrong here. We're back at 9:30 as we used to be. Have a great day, guys. And if you have any questions at all, you're most welcome to reach out to me via Twitter at AlexFX00. Have a great day. Cheers.